We ready? Okay. It's 10 o'clock. I'm going to call the Committee on Audit to order. Madam Clerk, please call the roll.
Commissioner Wilson,
Present.
Commissioner Peterson Mayberry, Commissioner Colleen,
Here.
Commissioner Garza,
Here.
Commissioner Knizek, Chair Dobb,
Here.
you have a quorum present.
Thank you. Next item.
B, Chairwoman's remarks.
I have none. Next item.
C, approval of the June 25th, 2025 meeting minutes.
Is there a motion for approval?
Support.
Been moved by Commissioner Wilson, supported by Commissioner Colleen. All those in favor?
Aye.
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 Anyone opposed? Anyone wish to abstain? Well, motion passes.
Okay.
Next item.
D, unfinished business. There is none listed.
Next item.
Item 1, under new business, forwarding a letter from Plant & Moran PLLC, the county's independent external auditor, providing a required communication to the Commission, Committee on Audit, and the county executive on the results of its audit of the county's September 30, 2024 financial statements and related annual comprehensive financial report.
I'm going to turn this over to our Auditor General, Marcy Cora.
I'll have everybody introduce themselves first. Marcy Cora, Auditor General.
Ramsey Abdullah, Plant Moran.
Keith Shemansky, Plant Moran.
Philip Eminenio, Plant Moran.
Stacey Reeves, Plant Moran. Amanda Ward, Plant Moran.
Alyssa Fleury, Plant Moran.
Vandy Ortiz, Deputy Auditor.
This is Plant Moran. They're doing their presentation of the results of the county's fiscal financial statement audit and the single audit for September 30th, 2024. This meeting is primarily for Plant Moran to go through their deliverables of findings in the audit. Then at the next meeting, we'll have the auditees where we'll discuss the corrective action that they plan to take to address all the findings in the single and financial statement audit. So I'm just going to turn it over to Plant Moran to begin the presentation.
Great.
Thank you very much. We appreciate the opportunity to be here today and the collaboration from all of the county's team to get the audit done and issued on time. It's a huge effort for the team to collaborate with us and add the audit to their daily operations. And so we very much appreciate everyone's involvement in the process. We do have just a short presentation that we've built today to cover highlights from the financial statement audit as well as the single audit. As we're going through the information, please don't hesitate to ask questions that you have. We'll be happy to address them. If there are any questions that we can't answer today, we'll be happy to follow up and get back to you on those.
Sure.
Yes.
I believe you're going to go into the PowerPoint.
Yes.
Yeah. Before we get that to the letter that you sent us, on page 7 and 8 of 8, possible. It's called possible.
Commissioner Colleen, can you use your microphone?
Oh, bring it closer. Possible audit adjustments. What's to be done with those?
Those audit adjustments are adjustments where we identify through the audit process. We communicate them with management.
Right.
Management and we both agree that they're not material to the financial statements. And based on sometimes timing of when those adjustments are identified in the process, we conclude to pass adjusting them in the current year financial statements. And then management can make those adjustments as they're part of their closing process the following year.
And we'll hear about these next year then in your report?
Some of them are recurring based on the nature of the adjustment, but the others are items that management would, if they are something that would come up in next year's audit, they would address them as part of their closing.
And you will comment on that in next year's letter?
Yes.
Okay. Thank you, Madam Chair.
Okay, please proceed.
As part of the audit engagement, we actually work through several different deliverables. One of those is the actual financial statement itself, which is the large document that you have that covers all of the county's operations. We also issue a letter that was just referenced that is required communication at the end of the audit. And then we have your separately issued reports, one being the single audit, which covers the federal programs that the county expends. And then 3 other reports that we issue related to the land bank, the building authority, and the sewage disposal systems. And those operations are also included in the combined financial statement, but the county has us issue separate reports as well. When we look at the financial statements and we talk about our responsibilities under the audit. We do follow government auditing standards as part of the audit because of the federal awards that the county receives. We issue our opinion based on fair presentation of the financial statements based on those standards and principles. So you get reasonable assurance that the financial statements are fairly presented according with those required standards. Keith is going to talk about the plan, scope, and timing of the audit.
If you're following along in the spiral bound PowerPoint presentation, we're on slide number 5 right now. So just to recap, we did send a letter to the entire commission laying out our plan for the audit at the start of the audit. And the timing was that we would begin planning and preliminary information gathering in July and August of 2024. We then used preliminary information from the county to perform our risk assessment procedures in September and October. The rest of our audit procedures, the main fieldwork portion, began late in November and was completed in May 2025. Next several slides are going to summarize the end of audit letter, which are required communications under the auditing standards. So as far as qualitative aspects of accounting practices, we noted no transactions entered into the county during a year in which there was a lack of authoritative guidance or consensus, and there were no significant transactions that were recorded in the improper period. Continuing on, there were 4 significant estimates that we highlighted in the letter. The first one being the liability for self-insurance for workers' compensation, certain health benefits, and other claims. This is your general legal obligation as well. That was estimated by the county using a combination of internal analysis as well as analysis provided by outside consultants. The next 2 significant estimates were the net other post-employment benefit liability, which relates to retiree healthcare, and the net pension liability. Both of those were based on actuarial valuations. And the final significant estimate was the calculation of estimated refunds and chargebacks on property taxes. And that was based on historical data as well as recent trends and the amounts that were delinquent at the time. So we did look at all of the significant assumptions and methodology that went into building these estimates, and we thought that they were reasonably stated, which allowed us to give our clean audit opinion. Moving on, we did note that there was one difficulty encountered in performing the audit. Our original plan, as communicated to the commission, was to complete the audit and file it with the state prior to the March 31st deadline. However, due to delays in receiving information necessary to complete the audit, the county requested and received an extension with the state and filed in advance of the extended deadline, and our actual date was later in May of 2025. There were no disagreements with management. And as far as corrected and uncorrected misstatements, which we've already briefly discussed, there were some material adjustments that were posted related to revenue and expenses in the general fund as well as the special projects fund, as well as a number of those uncorrected or past adjustments that we detailed at the end of the audit letter. We did request that management sign a representation letter, essentially telling us that they provided us clean and accurate information to the best of their knowledge, which they did as of our report date, May 19th. And to our knowledge, there were no consultations with other accountants. With that, I will turn it over to Rumsey.
Thanks, Keith. So before we get into going over the findings, we thought it would be helpful to talk about what a control deficiency is and what it takes to end up in this letter as a reportable audit finding. And I'm on slide 13 now. So a control deficiency happens when a control is not designed or is not operating in a way such that employees or staff are able to detect or prevent a misstatement in the financial statements during the normal course of doing. There are compensating or mitigating controls that are in place that can help minimize the impact of that deficiency. And if that is the case, then that does not end up in this letter. However, if that is not the case, then it does end up in the letter as either a significant deficiency or a material weakness. On slide 14, we take a look at the definition of a significant deficiency. A significant deficiency is less severe than a material weakness, and it's a control issue that is not likely to result in a material misstatement, but it's still important enough to warrant the attention of those charged with governance, such as this committee and the county commission. On slide 15, a material weakness is more severe than a significant deficiency, and this is a deficiency whereby there's a reasonable chance that a material misstatement in the financial statements would go undetected because of this deficiency. So, and it could have a material impact on the financial statements, which is what makes it a material weakness. So with that context, we'll now go over the control deficiencies. And then I believe on slide 15 or slide 16, we have a summary. There are 14 financial statement findings. 13 of those are material weaknesses, and one is a significant deficiency. And then there is one federal program audit finding that we're going to cover as well. So I'm going to reference the page number to each finding, and you'll find that page number in the 33-page report that's titled the Federal Awards Supplemental Information. That's the bigger of the reports. Finding number 1 is on page 16, and this is identified as a material weakness, and this is a repeat finding from prior years. And this first issue relates to the fact that during the audit, we identified several journal entries that were required to be posted for the financial statements to be materially stated. We presented these entries to management. Management reviewed and agreed with and posted those entries, so those are reflected in these adjustments. Also included in the same finding is a discussion of the issue related to the library penalty fines. So over the past 10 years, the county had misallocated penalties and fines to libraries, resulting in an estimated overpayment and underpayment of $3 to $4 million among the different library disbursements. Now, the total impact does not actually have an impact on the county's financial statements because the county reports the total, not how much is dispersed to each individual library, but it is still a financial operational item that we thought really was warranted to be included in the finding. Finding number 2.
Before we go on to number 2, does, Marcy, do you have any comments on this one, or do we have any discussion, questions from commissioners on this finding? Yeah.
I have no comments on this, and like I indicated, we will have the auditees that will come and explain their corrective action.
Oh, and I know you put together this summary, so
Mhm.
this one is a repeat finding.
Repeat findings since 2017.
Okay. So we'll go into a deeper dive on this one at our next meeting. All right, thank you.
And of all the findings, this one is the most common because anytime we have an auditor identified adjustment, we have to present that to you. So it's very common that you would have auditor identified adjustments. What you want to look for from the recurring nature of that is that you're not seeing, to your earlier point about those past adjustments, you're not seeing the same adjustments recur every year, and that the magnitude of the auditor identified adjustments are declining. So everybody, based on the large volume of operations that you have, the idea that you would have no auditor identified adjustments is less probable. However, what you want to do is just track the responses to those adjustments and make sure processes are in place to identify those adjustments from year to year so that the number of adjustments decrease and the magnitude decreases.
Marcy.
And I think what's a little bit different this year is the additional that was identified regarding the miscalculated penal fines for the libraries.
Okay.
Sure.
Yes.
Thank you, Madam Chair. And I know we're going to go into this
Yeah.
one by one in the next ones, but looking at the PowerPoint being presented on this page, the last thing it says is corrective action plans have been written to address the findings. Who do those get submitted to? The corrective action plans?
They're included within, at the bottom portion of each finding is the views of responsible officials
Right.
and planned corrective actions. And it's also filed along with your audit report to the state of Michigan as well as the Federal Audit Clearinghouse.
Does management's, what do you call it, management's response or whatever, does that qualify as a written corrective action plan?
That is the qualified plan, yes. But then it's up to management to execute on that plan over the coming year.
And it looks like 8 of these are repeat findings. And most of those, 5, 6, 7 of them are multi-year repeat findings. So how do auditors look at that when it comes up and they go, oh, this is the 5th year that we have had this finding and the 5th year of corrective action plans, yeah, we're gonna fix it. How do auditors view that?
I'm sorry, that goes into our risk assessment process. At the beginning of the audit, we evaluate the prior year audit findings, so it's almost incorporated into our audit plan to spend extra time in that area. And then knowing that that has been a recurring issue, it does increase sample sizes and the level of testing that we do in that area. And then ultimately, additional work that is done to be able to arrive at level of assurance that the balance is materially stated.
Okay, I just wanted to get your role, and Madam Chair, thank you. I know we'll go more into it, but I wanted to have the overall kind of picture here.
We're also responsible for auditing if the county represents that a finding has been corrected.
Mhm.
We have to audit to ensure that that finding actually has been corrected.
Beautiful. Thank you. Thank you, Madam Chair.
Commissioner Garza.
Thank you, Madam Chair. This is a question for our Auditor General. The auditor identified adjustments for each year and going back to 2017. Are there a list of those adjustments? I know that they might not be the same for each year, but I wanted to see if we could get that for prior year audits.
I would think we'd be able to get a list.
Okay, thank you.
And then Commissioner Peterson Mayberry.
Thank you. Thank you. My question was very similar to Commissioner Colleen's. I see that there are recommendations, but the recommendations aren't necessarily, or will they necessarily find their way to the corrective action? So you all made recommendations, but is that the action that we're going to take? Because I guess when I'm looking at $3 to $4 million of overages and underpayments for the libraries, so there's a recommendation made. Are we accepting this recommendation, or are we lifting up our own recommendation in a corrective action plan? And maybe that's something we're going to go deeper in, but that's a question I had.
We will walk through the corrective action at the next meeting with the auditees to get an understanding of the corrective action they're planning on taking, which should coincide with what they have in their reviews of responsible officials. But we also talked about, I don't know if you want me to get into it, we're going to have maybe quarterly reports from the CFO's office of the action and the progress they're making on the corrective action.
Yeah. Okay. All right, let's move on to the next item.
Thank you. I'll move on to finding number 2, which is on page 18. And this finding actually ties very closely to the first finding. And the main issue here is that the county lacks a formal process to monitor the general ledger and the financial reporting process. Ideally, each account and fund should be assigned to someone responsible for a regular review and analysis of that account. And right now, that's not happening consistently, which is leading to these many audit adjustments. So separate from the journal entry review and approval process, if somebody has an overall monitoring responsibility over each specific fund, that could also prevent and detect some of these journal entries.
All right.
Finding number 3 on page 19 is a material weakness and a material non-compliance. And this is another repeat finding. So during our audit, we noted there was 3 areas of non-compliance with laws and regulations that we're required to communicate to you. The first relates to the Unclaimed Property Act. So the county is holding old construction and performance bonds that go back many decades for projects that have mostly since been complete. Now, at the end of the project, the county should evaluate whether or not that bond or deposit should be returned to the original contractor or if it would be retained by the county. So that reconciliation has not been done. Therefore, the county is still holding those dollars. Now, if it is determined that these need to be returned back to the contractor, which it likely is the case for some of them, then those funds need to be escheated to the state. And because that hasn't been done, that is technically a violation of the Unclaimed Property Act. The second non-compliance
Sorry,
relates.
hold on. Commissioner Garza has a question.
Thank you, Madam Chair. I just wanted to see did we identify how far this goes back as far as that goes, or was this just for the audit year for last year?
These go back decades.
Decades?
Yes.
Okay. Thank you, Madam Chair.
Could I just add to that? There was discussion with Corporation Counsel. They were looking at these claims to determine if actually these could be retained by the county or whether they need to be escheated. So this is something I think Corporation Counsel may have to come and address the progress on that.
Right.
And then the second and third non-compliances that were identified are somewhat both related because they both relate to the Budgeting Act, the Public Act 2. The first issue is that there were several funds that had budget overruns. And then there was two funds that had that were budgeted as deficits, which is technically a violation of Public Act 2. And then the county did not prepare a budget for the Building Authority Special Revenue Fund, which is also a violation of Public Act 2. Now, we understand that the way that the county budgets and sometimes through appropriations, that there's a reason why things are done this way. And then particularly with the Building Authority Special Revenue Fund. So despite this, the fact that the county is aware of this and chooses to do it this way, we are required to just communicate that that is technically not in compliance with the Budget Act.
Okay.
Findings 4 and 5 are on pages 21 and 22, and both of these relate to cash reconciliations. Both are material weaknesses and both are repeat issues. Finding 4, it was identified that a reconciliation of inmate property cash accounts and the balances per the jail management system are not timely reconciled back to the bank statements and to the general ledger. So there was approximately $290,000 of differences between the bank statement and the jail management system balances. And again, this is not new this year, that this has existed for several years. And then similarly in finding 5, the cash receipts fund did not have controls in place to ensure that the fund was reconciled at the start of the audit. And there were some asset and liability accounts that could not be substantiated. Finding number 6 is on page 23, and this relates to the accounting for the county's fiduciary fund. So the county holds cash in a fiduciary capacity for in several fiduciary funds. However, the county did not have procedures in place to ensure that the funds held in those fiduciary funds were actually fiduciary dollars that should be held in that fund, or if they should be accounted for in the general fund. And similarly, there were dollars in the general fund that should have been transferred to the fiduciary fund. So this is going back to several years ago. The Governmental Accounting Standards Board clarified the accounting requirements for fiduciary funds, and it put specific guidelines into when to use a fiduciary fund versus when to use a general fund.
Commissioner Kling?
Please define fiduciary funds.
That would be assets held by the county for the benefit of another or an external organization, or the county. They're not available as the county's resources to be used by the county.
And yet they move to the general fund.
In some situations, they should be in the general fund, and they were held in the.
All right, we'll talk more about that then. Thank you for the definition.
Mm-hmm. On page 24, finding number 7. Now, this is a significant deficiency, and it is a repeat finding, but this is less in severity than the previous material weaknesses. And this relates to the undistributed tax fund. Some of the balances in the undistributed tax fund were not reconciled, and while this is marked improvement in the reconciliation of the major accounts from prior years, there are still some smaller balances that lack a reconciliation.
I could ask you, so are there taxes in this undistributed fund that actually has to be distributed still to someone? They just haven't determined who they go to?
Correct, yes. Okay, and then I'll hand it back over to Keith to cover the remaining financial statement findings.
Beginning with finding 8, all of the remaining financial statement related findings are all material weaknesses, and none of them are repeat findings. So these are all issues that we identified for the first time in the 2024 audit. Finding 8 is IT related and specific to backups. Key applications are backed up on a regular basis, but the Active Directory or the network is only backed up incrementally, with full backups taking place every 6 months. So with that, in the event of a data loss, there could be significant difficulty in restoring data if there are only incremental backups or potentially a full backup that's several months old. So we recommend doing more frequent full backups of the entire network. Finding 9 on page 26 relates to the net OPEB liability for retiree healthcare, which, as I mentioned before, is based on an actuarial evaluation. Every 2 years, the county provides census data to the actuary related to all active and retired participants. That's a major input into that actuarial valuation that this year resulted in a total liability of $94 million. There were a few different errors identified in the data related to active employees. One of the major errors was identified shortly after the data was sent to the actuary. The actuary asked the county to take a closer look at it. They determined that a correction was necessary, and that data was corrected. So the corrected data was used in what became the final actuarial evaluation. Subsequent to that, after the valuation was completed, as we were doing our audit procedures, we identified two other more minor errors. And so the county followed up with the actuary to estimate the potential impact on those. It was determined to not be material. And so those were passed on, and it was determined that the valuation would not be updated for those due to the immaterial impact. Finding 10 on page 27 relates to online banking. So each year we take a very close look at the controls over online banking because there is a significant risk that if appropriate controls are not in place, there could be a misappropriation of assets from the banks. This year we did note that accounts within one particular bank could be wired out to external accounts by 3 particular county employees without a secondary review or approval. And so we recommended the county take a look at that and implement additional controls to require secondary approval for those wire transfers.
Can I just say, Keith, I think you also did additional procedures to ensure that there was no wire transfers taking place.
Right. Based on our
There-
procedures, there were no inappropriate transfers that we noted, but there remains this risk, which is why we're reporting it as a finding. Finding 11 is detailed on page 28. As you likely know, the county converted its payroll system to an updated system as of July 1st of 2024. Certain balances essentially flow automatically from the payroll module into the general ledger, particularly into an impressed payroll account, which is where balances should sit on a temporary basis, items such as withholdings and taxes that are due to other entities. And then once they're paid, they should be reconciled and cleared out. Beginning with the conversion date of July 1st, those balances that automatically posted from the payroll module were not being appropriately reconciled and adjusted. And so we looked at the impact as of September 30th. It was not a material impact on the statements, but nevertheless, those should be further investigated and procedures should be put in place to reconcile them regularly. Moving on to finding 12 on page 29. This one relates specifically to the Brownfield Redevelopment Authority, which is a component unit, technically a legally separate entity from the county itself. And it relates to what was the Pinnacle Racetrack in Huron Township and is now an Amazon facility. As taxes are captured each year, the amounts received by the Brownfield Authority are actually owed to the county general fund to reimburse the general fund for expenses that were paid at the beginning of the Pinnacle project. About 4 years ago, when capture began, the Brownfield was recording the cash as it came in, but was not recognizing revenue or the fact that it was owed to the general fund. So those two items offset. There was no net there was a net impact of 0 on the overall net position of the redevelopment authority. But in 2024, we recommended and the county did make corrections to properly reflect revenue to date as well as the liability owed to the general fund. Finding 13 is on page 30. This one relates to one of the non-major governmental funds, the Michigan Indigent Defense Commission Fund. The trial balance system in closing the books as of September 30th generated a $420,000 balance in that fund. That was essentially a plug or a rounding amount that needed to be investigated and corrected. But as of the time of the audit that had not taken place. So we did prompt the county to look into that and post an adjusting entry, which they did prior to the end of the audit. Lastly, finding number 14 on page 31 relates to bank reconciliations. We have had findings related in the past to bank reconciliations, and it is worth noting the process is significantly improved. But this year's finding relates specifically to the timing of the year-end bank reconciliation, the September 30 ones. The bank reconciliation process, as far as the county was concerned, was completed on a timely basis. However, in auditing the bank reconciliation, we asked them to look more closely at some of the reconciling items as they didn't appear accurate or necessary in our eyes. And the county did end up making adjustments to the September 30 bank reconciliation during the audit, which was taking place several months later. So due to the fact that changes took place during the audit, it would indicate that the bank reconciliation wasn't actually complete and accurate on a timely basis. With that, I will hand it over to our single audit team to speak briefly about the federal awards audit and the one finding there.
All right, thanks, Keith. So as noted, the county goes through their single audit process on an annual basis as the county expends greater than the threshold of expenditures on an annual basis. We are required to test major programs, and major programs simply just mean the programs that we've tested. And we go through criteria that's laid out for us by uniform guidance in our selection process. Of the 110 million that the county expended this year, we tested 5 major programs, that being WIC, CDBG, state and local fiscal recovery funds, the aging cluster, and child support enforcement. Like the financial statement audit, we actually rendered an opinion on each of those major programs, and we did render unmodified opinion, which is the clean opinion that we can offer, saying that you all would have materially complied with all the terms and conditions of those awards. We did have one finding that we noted for one of the 5 major programs. So all the other programs that we tested did not result in any findings. The report that you're in, you can find a summary of that information to show just the results of the audit. But I'm going to ask Alyssa to maybe walk us through that one finding related to the aging cluster.
Perfect, thank you. So this finding is in detail on the same schedule that we were just looking at. So this is on page 32, the last page of the report. So again, this relates to the aging cluster. As you can see here, it is identified as a material weakness. And I want to start by saying, while we did identify this finding related to internal control, we did not identify any issues of noncompliance related to this program. So through this program, Wayne County helps provide meals to various individuals. And so the first part of this finding relates specifically to halal home delivered meals. So in our testing, we identified that only one person is responsible for reviewing eligibility of this group of participants, and there is no review that takes place after that. The next part of the finding relates to home delivered meals as well as liquid meal participants. So again, here, there was no review in place to ensure that updated assessments were received for both of these groups of participants, as that is necessary every 6 months. So again, this was the only finding that we noted throughout our 5 major programs. But if there are any questions on that last finding.
I think so.
Perfect. Then I think I'll pass it over to Phil.
Thank you. So quickly, we would just like to end going over just kind of a little bit of our discussion on our consideration of fraud when we're going through the audit. So auditing standards do require that we consider and address potential risk related to fraud. So this would include how the financial statements could be susceptible to material misstatement due to fraud, what conditions might allow for fraud to be present, or even how fraud could be perpetrated or concealed. So we consider all these items and potential risks as we go through our planning phases, our internal discussions, and we also do have inquiries, which if you go to the next slide, which would be page 18. This discusses the requirement for us to also make inquiries of certain individuals. So those auditing standards do require that we make inquiries with management regarding their awareness of and understanding of fraud risks, and steps to mitigate those risks. We're also required to communicate with other members, so other entity members, including board members, non-financial executives, and the other people within the county that aren't in charge of financial reporting, just to gain an understanding with them about their knowledge of any existence or suspicion of fraud, as well as their views of fraud. And if you go to the final slide that we have, which is 19, this will kind of show who we had those inquiries with this year, or at least what the positions are. So we did talk with 4 elected officials, 3 financial executives, and then we did make sure to include someone else at the county that's not in any of those roles, just to really discuss and go through our standard inquiries with them, at which point we take those responses, we make sure to tailor our audit plan and approach as necessary if there's anything that comes up to make sure that we're addressing any concerns or any risk that comes out of those conversations. And with that, that's what we have for our presentation. So if there's any questions in general for us and other.
Okay. Commissioners, any questions? Commissioner Colleen?
Thank you, Madam Chair. I want to go back to page 15 of the report. Sometimes that causes a bit of confusion, the schedule of findings and question costs. So some of this is a little bit jargon. So I want to make sure I'm clear on it. I think it's pretty clear on the financial statements, right? We just went over the findings. Under the federal awards, the last box to be checked, any audit findings disclosed or required to report in accordance with section 2 and all of that stuff. What does that mean when you check a yes or a no there?
So essentially what that means is that uniform guidance says if we have findings that are a material weakness, a significant deficiency, or non-compliance, we have to check that box, yes. So if you see boxes above checked, that one is going to be checked, as well as if we had any material non-compliance
Okay.
matters.
So that's just to say, yeah, we had some findings.
Exactly.
Yeah. And then the one that always, right at the bottom, the dollar threshold, because there's always is this a low risk auditee? No, we're not. But I know there's some, it's one of those things sometimes where it's backwards from what you think it is. So could you just go over that? Why we are not a low risk audit according to your standards?
Absolutely. So you mentioned the threshold. So the dollar threshold that we test is based on the number of expenditures that you have, the amount of expenditures you have. There's criteria that tells us what's a type A, type B, and it just helps us select those programs we're going to test. From a low risk auditee perspective, and you're right, a lot of people ask that question. There's criteria we must address, and there can be no material weaknesses in the financial statements or the single audit for the prior 2 years. There can be no question costs greater than 5%. So if you think about the findings that we went over, that were material weaknesses on the financial statement side, as well as the single audit, it doesn't allow you to jump that hurdle to say that you're a low risk auditee. So that's a 2-year look back. So for 2 years, the county cannot have certain types of findings. And once they achieve that, then you would be a low risk auditee. The only difference that makes from a single audit perspective is the amount of coverage we're required to get. So a low risk auditee, we would only be required to test 20% of the expenditures. A non-low risk auditee, we're required to test 40%. But that is the last test we do, because there's other tests we must follow and criteria we must follow to select. And then the last thing it says is, did you obtain enough coverage? Either you did or you didn't. And if we didn't, we would have to select more programs until we meet that coverage. But in the county's case, generally, by the time we select the major programs we need to test, because of the size, we will have met the coverage criteria either way.
So the fact that we are not a low risk auditee tells me that requires additional testing on the part of the external auditors to do.
That's correct.
Okay.
Or the federal awards audit.
For the
Yeah.
feds, yeah. Yeah. Thank you. The feds. Thank you, Madam Chair.
Okay, anyone else? All right, Marcy, do you want to, yes, Commissioner Wilson.
Thank you, Madam Chair. Just a quick inquiry to you, sir. You talked about the inquiries of the elected officials as well as financial executives, and looks like you got one other individual throughout the county. I think I know the answer, but help me out. Are you looking to get some type of determination from these individuals on their knowledge of maybe a material weakness or a significant deficiency or a non-compliance if they're aware or unaware? What is the end resolve?
So, yeah, so yes, we have, there are standard inquiries that we like to inquire just to help us with tailoring our audit approach. So if there is any, now, one of the main ones is we are required to make sure if there is any fraud that they're aware of, we are required to ask just because we'll tailor our audit plan and approach to maybe address that, make sure we're addressing that area in case there could be any more potential risk. So with our inquiries, we're really targeting any concerns, any areas that any of those individuals may have, if there's direct knowledge or indirect, and making sure that as a group, we can come back together during our planning process. And as I kind of mentioned, we'll continue to reevaluate throughout the whole audit process. We make sure to come back together and really make sure that we're addressing any of those concerns as we get through those inquiries. And sometimes there won't be much in there, and sometimes there's other areas that we will, maybe it wasn't as significant an area that we were originally going to look at that we might then go more into detail on.
And when we inquire of individuals throughout the county that are in charge of various cycles of revenue and expense so that we understand if there have been improvements to the internal controls or transition within the team or areas. So we know what we know from our risk assessment process, but this really allows us, and it's a required communication, to understand what may have changed or what areas are of concern within individuals that are operating at the county that we should also incorporate into our process.
Okay, thank you.
Commissioner Peterson Mayberry.
Thank you, Madam Chair. On page 19, I think it was mentioned that the way that the county operates is, and I don't know if you said this word in particular, but out of compliance for Public Act 2. So can you just talk to me a little bit about that? Is that we're operating in a space that we willingly know that is out of compliance?
Yes, I'd be happy to cover that. So I would say that for certain budget overruns, that if any account is over budget, that's technically a violation of the act. The county performs appropriations of certain funds that are done after the fact, but they're not reflected as a budget amendment. So that is sort of what I think that's what I was referring to there. And then also the Building Authority Special Revenue Fund, the county did not prepare a budget for that fund. I know that the county and might have an explanation for that as to why it's not prepared, but that's one that is technically a violation and non-compliance with the Budget Act. So it really relates to those two things, coming down to budgeting and why certain funds have budget overruns that were not amended. And then also why a budget was not prepared for the Building Authority Special Revenue Fund.
And that test for the budget overrun is based on how the county prepares and presents its budget in accordance with the act. So in total, a certain department may be under budget, but you have to look at the level of detail that follows the Appropriations Act. And so one area within that department could be over budget while another's under budget. That's still a violation of the act.
Marcy.
I think this also ties to making the budget amendments after the fiscal year. And I believe this year we had a significant budget adjustment that came after fiscal year end.
Yeah.
Yes.
Thank you.
Okay. Commissioner Cline.
Just quickly, Commissioner, on your question, the Auditor General, every 3 or 4 years, get an audit of the folks that don't have a budget. It's one of the it's one of the things that gets reported in the county general audit, but it's a special classification, you know.
In the act there is that discusses those funds that were over
Yeah, the
budget.
building authority, right?
Well, the building authority has a separate standalone financial statement, and each year we report that
Yeah,
has not been.
and you audit them. We get an audit from our Auditor General. Seems like every 3 or 4 years of them.
We haven't done the building authority other than the financial assessment limited review where we summarize the standalone.
Well, I
statement.
want to point out is this is not the first time
Right.
this has come up.
It comes up every year in our.
Every year, we ask about it in this committee. For many years.
Mhm.
Thank you, Madam Chair.
Any concluding remarks?
I just wanted to take the opportunity to thank Plant Moran for all their effort they put into this audit. It is a major task to audit a county of this size. There's a lot of meetings and late night calls and, Dave Helisek has retired as of June 30th, so he's no longer with us, but I think there's a great team here that does the work and also give some thanks to M&B Yogesh Gosani, who leads the task from the M&B side, and Shantika's here from the federal program side. I think they do a great job trying to get the audit completed on time. And I think it's just a great team effort between M&B and Plant Moran. Just thank them for all the effort they did for this engagement.
Yes, thank you very much. Appreciate it. Wait, do we need a, is this receiving file?
Could we just
Yes.
pass it for the day, for the next meeting?
Yes, thank you.
Pass for the
Okay,
day.
all right, it's been moved by Commissioner Colleen, supported by Commissioner Garza. All those in favor of passing for today, for the day?
Aye.
Aye. Anyone opposed? Anyone wish to abstain? Motion passes. Thank you. Next item.
F, such other matters as may be properly submitted before the committee.
There are none. Next item.
G, public comments.
Is there anyone here who wishes to make a comment to the Committee on Audit? In person, on the phone, or on Zoom? If you're online, you can just unmute yourself, raise your hand. Any emails?
No emails were received and no hands raised on Zoom.
Second call for public comments. Third and last call for public comments. Hearing none. Next item.
Adjournment.
Is there a motion to adjourn? Yes. Is there support for adjournment? All right, all